Hi students, welcome to today's class. In today's class, I'll be teaching you one sum how to make the adjustments in case of a deceased partner or in case of the death of a partner. What has to be done? How the assets have to be revalued. So as I told you, in case of retirement, you revalue all your assets and liabilities, you determine the new profit sharing ratio, the gaining ratio, you transfer all the reserve, surplus fund and surplus, reserve fund, profit and loss, everything you transfer, you make the adjustment for goodwill. The same thing, the same adjustments what we do for retirement has to be followed for the death of a partner also. But the only thing what you have to keep in mind is there you settle and give the money to the retiring partner, here you pay to the deceased partner executor or to his legal representative. That is the only thing change is there. Otherwise, the treatment is same just like the retirement of a partner. Okay. So, we will move to question number 21. I will read the question. You just listen, understand and then we will move to the sum. Question number 21, page number 222. Question number 21. Varsha, Shanti and Madhuri are partners sharing profits in the ratio of 5:4:3. Their balance sheet as on 31st December 2017 is as under. Capital account Varsha, Shanti, Madhuri, total is 1,60,000. General reserve 48,000. Salary creditors 32,000. Premises 1,20,000. Stock 40,000. Debtors 50,000. Cash at bank 18,000. Profit and loss account loss, since it is shown on the asset side it is loss 12,000. On 1/1/2018, Madhuri died and on her death the following arrangements are made. Stock to be depreciated by rupees 5,000. Premises is to be appreciated by 20%. To provide rupees 4,000 for bad debts. The final amount due to Madhuri was not paid. Prepare revaluation account, partners capital account and the balance sheet of the firm after death. Here three partners are there, Varsha, Shanti and Madhuri. So the Madhuri, the third partner, dies. So what has to be done? How to make the treatment in the case of a deceased partner? First, what you have to do? You have to prepare the revaluation account. What is revaluation? Revaluing all your assets and liabilities. That is, you have to find out what is the value of the asset and the liability, the beginning of the accounting period, and what is the value of the asset and liabilities now, that is the end of the accounting period. That has to be compared. Okay. If asset increases, it is profit. Asset decreases, it is loss. If liability increases, it is loss, and liability decreases, it is profit. So first we will move to revaluation account. Question number 21. Revaluation account. It's a ledger, so use the center of the page. Debit, this is credit, rupees. Okay. So if there is any profit on revaluation, you put on the credit side. Loss on the revaluation means you put it on the debit side. Okay. And see whether credit side is greater or debit side is greater. If credit side is greater, it results in profit. If debit side is greater, it results in loss. Okay. Now, how to prepare the revaluation account? What you have to do? To prepare the revaluation account, you have to see the adjustments. So, what is the first adjustment given there? Stock to be depreciated by rupees 5,000. 5,000 stock is depreciated. Stock is an asset. Depreciation means it is a loss. So, when an asset decreases, it results in loss. So, loss means where you have to put? You have to put on the debit side. So, you write here. To stock. The word by means it is the actual loss. Okay. So, 5,000 is the loss. Word by is a clue to find out the actual loss. Okay. Premises to be appreciated by 20%. Appreciated. Premises is an asset. When an asset appreciates, it results in profit. Profit means what you have to do? You have to put it on the credit side. So you write here, by premises. So 20% of 1,20,000, that is 24,000. Okay. Next, what is the third adjustment? To provide rupees 4,000 for bad debts. Bad debts is a loss. So loss, what we have to do? You have to put it on the debit side. So write here, to provision for bad debts. Provide 4,000 rupees for bad debts. Okay. Anything else is there in the adjustment? That's all. Only 3 are there. Okay. Stock is an asset. Asset depreciates, it's a loss. You're creating provision for bad debts. Bad debts is a loss because it is you may get a debt which is not recoverable, is a bad debt. It is a loss. So you have to debit it. Premises is an asset. Asset appreciates. So what is that? It results in profit. Now see which side is greater. Credit side is greater. That is, you are getting here 24,000. You are getting 24,000 here. You are getting 9,000. So find the difference. So that results in profit. So write to profit transferred to all partners capital account. So who are the partners? Varsha's capital account, Shanti's capital account, and then Madhuri's capital account. So what is it? If here 24,000 you got, here 9,000. So 24,000 minus this 9,000, your profit is 15,000. Total profit is 15,000. That 15,000, what you have to do? You have to divide in the ratio of 5:4:3 for all the 3 partners. That is 15,000 into 5/12, 15,000 into 4/12, 15,000 into 3/12. Okay, so that you divide, you will be getting 6,250, 5,000 and 3,750. So you add all this, 15,000. Okay. So the profit is 15,000. This 15,000 should be divided in the ratio 5:4:3. That is, you will get this one. At this revaluation profit, what you have to do? You have to prepare capital account and transfer this profit to the capital account. Okay. Next, we'll move to capital account. Debit, credit, capital account. It's a ledger. Use both the pages, center of the page. 3 partners are there. Madhuri, Shanti, Varsha. Rupees. So here also, right. Varsha, Shanti and Madhuri. Rupees. Okay. What is the first thing you have to keep in mind when you prepare the capital account? As soon as you prepare the capital account, bring down the balance from the balance sheet, that is what is given in the question, the capital account balance. Why do we put it on the credit side? Because capital account will always have credit balance. Why? Because it is a liability, and all liabilities will always have what balance? Credit balance. So bring down the opening balance to the credit side. Okay, so you have to write like this: by balance brought down 80,000, 60,000 and 20,000. Okay. Next, what you must do, you must see the revaluation account. You just now prepared revaluation account and you got a profit. So transfer the profit to the capital account. If it is profit, put on the credit side. If it is loss, means put it on the debit side. So by revaluation profit account. So that is 6,250, 5,000, 3,750. Okay. Then what you must do, you have to see the balance sheet. That is, you have to see the question in the balance sheet whether there is any reserve, any fund or any P&L is there. Okay. On the asset side, profit and loss is given and the bracket is given as loss. Asset, if the P&L is given on the asset side, means it is loss. Okay. Loss means what you have to do, you have to put it on the debit side. That loss of 12,000 rupees should be transferred to all the three partners. So write here to profit and loss account. So 12,000 is the total loss that should be transferred in the ratio of 5:4:3. That is 12,000 into 5 by 12, 12,000 into 4 by 12 and 12,000 into 3 by 12. So if you divide these, what you will get? We will get 5,000, 4,000 and 3,000. Divide it in the whole profit sharing ratio. Okay. Then anything else is there? That's all. Now what you have to do, who is the deceased partner? The partner who has died, that is after the death of Madhuri. Okay. So the Madhuri is the deceased partner. Is the deceased partner paid off? No, she's not paid. So when she's not paid, what you have to do? You have to transfer the balance to the deceased partner's executor's loan account. Next, see whether there is anything else is there, any reserve or any surplus is there? Yes, general reserve is there. What you have to do? This general reserve also should be transferred to all the partners' capital account in their whole profit sharing ratio. Okay. So general reserve is total 48,000. So by general reserve account. So this 48,000 divided the ratio of 5:4:3. Okay. So that will give you 20,000, 16,000 and 12,000. So now put the total now. 1,06,250, 81,000 and 35,750. Now, who is the deceased partner? Madhuri. Is Madhuri paid? No, she's not paid. So what you have to do? The balance should be transferred to the Madhuri's executor's loan account. Okay. So first find the difference now. So 35,750 minus this 3,000. So that should be transferred to Madhuri's executor's loan account. Okay. So 35,750 minus this 3,000, you will get 32,750. Then balance to balance carried down. So 1,06,250 minus this 5,000, that will give 1,01,250. 81,000 minus this 4,000, that will give you 77,000. Dash here. Bring down the balance total. Bring down the total 1,06,250. 81,000 35,750. Okay, now only two partners are there. These two partners balance you bring down. So by balance brought down 1,01,250 and 77,000. The other partner is not there, so put a dash. Okay, this is how you have to prepare the capital account. Next, what you have to do? You have to prepare the balance sheet. Balance sheet as on 1/1/2018. Okay. Liabilities rupees, assets rupees. Okay, now we'll go from the asset side. So you see the question, you see the balance sheet, we'll see one, we'll post one by one. Okay, first premises, 1,20,000 is appreciated, so add appreciated by 20%, add appreciation. Already you calculated in the revaluation account 20% on this, so that you take and bring it here, that is 24,000. If you add, you will get 1,44,000 premises. Next, stock value 40,000, but it is depreciated, less depreciation, 5,000 is the loss, depreciation, subtract that, so we get 35,000. Debtors 50,000, that you deduct the provision for bad debts, provision for bad debts, you created 4,000 rupees for bad debts, that you subtract, so you will get 46,000. Next cash at bank 18,000. The deceased partner is not paid, so we are having that money. If he is paid means if he or she is paid, then it will be reduced, but here it is not paid. So cash at bank 18,000. Now see the question, after cash at bank you have profit and loss. That profit and loss account you should not bring it here. Why? Because that loss you have already transferred to the all the partners capital account in the old profit sharing ratio, and you have shown it in the capital account. So again it should not be repeated here. Okay. So asset side it is over. So now we come to the liability side. So liability side, capital accounts. So who are the existing partner? Varsha and Shanti. So now you have to be very careful. For Varsha and Shanti, what balance you must bring? You have to go to the capital account, the brought down balance, the last balance what we got, that you have to bring it here. So that is for Varsha is 1,01,250 and for Shanti it is 77,000. So add both and put it in the outer column, 1,78,250. Okay. The deceased partner Madhuri is not paid, so that money is transferred to Madhuri's executor loan account. So that also you bring it here. So Madhuri's executor's loan account. 32,750. Then finally creditors. No adjustment for creditors. How much creditors? Next, sundry creditors. 32,000. Okay. Now put the total on both the sides. So that will give you 2,43,000. Here also 2,43,000. Okay. So this is how you have to do the treatment in the case of a deceased partner or death of a partner. All the adjustments, everything, the same thing what you've done for retirement, but only thing a word, one more word you are adding here. Since it's a deceased partner, you are adding the word executor. Otherwise, the procedure is the same. Okay. Hope you understood, children. Thank you.